Robert, thank you so much for coming to Dillionaire, man. I appreciate it. What's up, everybody? How you guys doing this morning? Good morning, guys. Opinion on an 1855 5750 Iron Condor for Chipotle? For 825. I mean, I don't particularly like condors on Chipotle anyway, but here, I'll build it. Let me say, what is it? It's 1855 5750. Okay, 55 and 5750. And then what's the other side? 55 42 4250 40. That's an inverse condor, right? That's what you want to set up. So your assumption is that it will move more than 0.3% over the course of the week. Did I read this wrong? No. Do you want the inverse? I don't know which one you're buying and selling here. Hold on. Both of these suck. Well, the regular Condor is a little bit better, but that's a lot of fucking risk. Isn't historic volatility on this pretty high? Like your chance of profit's super low. Good morning, everyone. Haha, we all beat Carl. Carl is a nerd and won't time me out. You're lucky Carl's not going to wake up for another hour. Good morning, NVIDIA question. I'm planning on straddling earnings. Do you think we'll have an impressive price movement like last earnings? Well, if we do, it's definitely priced in. I think NVIDIA is pricing in like a 23% move over 30 days for its fucking earnings. So, even if you had a straddle, you're talking like, let's see, so you get it for like, even if you get it for like this week, you need a minimum of 12% to be profitable. Yeah, 11%, I guess. You need 11% move for to hit profitability. Well, greater than 11%. It's a lot of fucking money for kind of a slim chance. I'm not sure a strangle would be better. Strangle might be better. 32, so like that. That still needs like 12%. Cheaper, but so the strangle's arguably better here. But they both suck. So that means if IV crushes anywhere in like within a 10% range, you won't make any money. For me, Chipotle usually causes a lot of movement. Yeah, I agree. Their stock too. It gets the runs really frequently. Thoughts on my car post and the country club general chat? I mean, it's better than a Land Rover. Also, SLD down sound Monday AM. And SLD's over Monday AM. I think INTC is beginning to flatten out from their initial investment into their $20 billion foundry project. Do you think there's a good entry point for a 5 to 10 year hold? No. Um, it might be an okay point to start DCAing, but I really don't like it as like an entry point. If you're gonna buy any substantial amount of it, I don't like it very much. Um, it's like 32. You could probably get it for 24 again at some point. Regardless of the cash flow tie up, I mean, Intel's not, coming out with any groundbreaking products right now or anything. And the assumption is, despite what Nvidia said about their sales that they've yet to be paid on, um, the whole industry is experiencing a drawback, right, from capital expenditure and operational expenditure reductions. Remember that free credit is becoming sparse, non-existent, and credit markets are drying up, and companies aren't turning to their like revolving credit lines as much. So growth is going to contract, and that's not good for Intel or AMD or Nvidia really. But so I don't think we're at a point yet where Intel's like a good value. Also, like 3 to 5 years before their foundry's built out, provided they find enough labor to staff it, which TSMC's already had issues with, and they've had to delay till like 2025. And if they're both competing for the same skilled labor pool, I mean, that's just gonna put further strain on it, right? It's a sold call put condor on CMG. I was looking for an alt since Lulu earnings 831, so it'd be unwise to sell a weekly iron for that week. I was also looking at Myrna and TTWO. So you're playing an inverse condor. I mean, pick anything with high HV. I guess those, like, the higher price of the underlying stock, the less you need it to move to get out of range. CMG has like 250 strikes, or every 250 strikes, so that's hopeful. But yeah, if it's inverse, not so bad. I mean, it's just like the return on risk is awful. Like, hold on, let me switch it back. Like, you're getting $25 on a $225 debit, so 11% return. It's not great. I mean, it's not terrible, and yeah, you'll probably make money on it, but it could be better. At least stretch out the spread like a little. You get 12% there. That's not even that much better, honestly. Oop. 14%, right? For 60. I mean, you need a slightly bigger move, but 0.5% doesn't seem excessive. Their credit. You just said it was inverse. I make 225, the max loss of 25. Uh, no. So even if that's... Wait, hold up. Huh. What the fuck is wrong with this? Oh, it's the spreads. What was it again? It was like 55, 57, and 42, 40. You know, the chances of this hitting are like none, right? It seems wide, but for Chipotle to close a whole week with less than a 0.4% move. You're targeting like a range way the fuck below historic volatility. Like the average variance in Chipotle is more than 1%. Thoughts on my car post? My consternation for this nation is the preoccupation and fascination with wealth assimilation, not creation, leads to economic segregation, inflation, taxation, but absent generation, we're all just population for corporations. It's frustration. So what we buy in to get ours, I love it. Nice bar, Draxx. Well played. Glad I asked instead of eating that one. Yeah, I mean it's like an $1,800 stock. It doesn't it generally doesn't stagnate a lot. They have a pretty low float, and it tends to be really volatile. This would be like something that you'd want to do on I don't know, maybe like industrials or something that's like in a like slow growth phase, and they've kind of like maxed out their share offerings, so they're real liquid. I sold 10, 45, 75, 45, 45 bear call spreads a couple weeks ago. And my paper account is the best trade I've made in my life. Let's sigh. Can you please massage my biases and talk sweet nothings about commodities? I mean, they've been doing okay. Like broad commodities, last week they saw, you know, a continued rejection, but they're consolidating to the downside. We'll see if they break out again on a stronger move. A lot of this has to do with the fact that yields are marching forward a bit and the market's been dropping. Energy stabilized a bit, like oil stabilized a little bit into the end of last week after losing gains pretty much all week long. So hopefully just finding a higher low here in its uptrend. And then we'll start to see oil tick up more into the latter half of August. Although we are historically hitting a lower demand period into the end of August, beginning of September. And then generally around like mid-September, we start to see increased demand again from the trucking industry, the shipping industry. Lulu's been working the last 3 weeks for me. Yeah, I could see that. um, it's been trading kind of flat. Although this range still pretty big, right? This is like a 5% range it's trading in. More recently? 6%? How fucking wide are you selling? Because this is, hold on. This is a lot, this is a lot beyond like point 0.5, right? Are you selling them wider on Lulu? Or like longer periods of time and then just exiting them when they hit your midpoint? What's the purple box now? So the purple box was just to capture if we saw any capitulation below 43.50 last Friday. We didn't. I can get rid of it. It doesn't. It was really just. I think it was dragged down further too, to like 4,300. We didn't get like broad capitulation from the 43.75 or the 4,400 strike last Friday. That doesn't mean that we won't see that happen this week. But I think for the most part, 44.50 has been given up on. 44.25, 4,400, and 43.75 all remain pretty stacked with short puts. 43.50 and 4,300 have accumulated more over the last 3 days. So they keep moving their risk down, but the risk is still there. 30-year mortgage over 7%. Yeah. What do you think about adding Express shares? It's already below my cost basis. So there's two arguments for this. One, the share price could go up after a reverse split. Although historically share price tends to drop um, after a reverse split, and so that could be a better time to add more if you plan on adding more. I mean, the reverse split doesn't really affect the price, right? It just changes the number of available shares. So, if they reverse split at the current price and you were to buy more, it wouldn't change your like cost basis. Or it would lower your cost basis if the current price is below your cost basis, right? So it doesn't really matter. It's probably best to wait for everything to shake out. I mean, Express hasn't done anything super notable yet to change the direction of the company moving forward. Not that they don't have ample money to do something, and opportunity. They just haven't. I expect at some point they will. I know they picked up another like no, they picked up another investor like 4 months ago. He seems to be involved in some other fashion ventures in the past. My gap between sold calls and puts is 4 strikes. 38.75, 75, and 390, 72.50 about this week. I mean, yeah, but the stock's like if it closes Friday to the upside of that, like where like VWAP is currently, right? Or the downside of it, you get blown out because those moves are like 4%. 75.90 is where you're doing it. Okay, so that's a lot wider than what you have on Chipotle. That's like that's like a 4% wide condor. The Chipotle one was like 0.5%. Can you teach us how to make a guaranteed profitable Franken spread? That's not how that works. I have 38, 387.50. With a lot of data. Okay, that was the Lulu thing. With a lot of data, JPAL this week. How is Todd going to keep his job? It seems like volatility's back on the menu. I mean, they did their best to try to get volatility back down into the end of day Friday. You can probably see that here on like the correlation charts with like core 1M and 3M and SPX. Like that end of day, if I go down to the 1 hour, you can really see it. That like end of day pump. That really, they really pushed down like correlation as hard as they fucking could, right? So I mean, they could try to reverse it, but this trend is generally pretty hard to reverse, at least in the past. There's very few instances of it kind of peaking like that and not getting like a complete blowout of volatility. If you had 10 grand or so to throw at Husky shares of a couple companies, and we're happy with 10 to 15% gains, short to medium term, which companies would be good options worth considering? I have no idea. I mean, I have all the like long-term holds that I'm in Pickle's picks right now, but it's been a while since I've added money to anything. Short to medium term 10 to 15% gains. I mean, sounds like you're looking for like a unicorn. Are are you sure you can't just do better with treasuries? Who the fuck has 15% growth? Just shares, not Husky. Okay. I usually just theta burn the condors and close at 40%. Okay, that makes more sense. But also your Lulu condor, the spread is way fucking wider than the Chipotle one. I was thinking BTU or something that run from 18 to 23 or so was pretty cool. Okay, I mean, BTU's pulling back down right now because China's economic data looks like shit again. Um, so there might be an entry opportunity back in the like low $20 range. If you get really lucky, it might fall below 20. Um, there could be an entry there. I prefer to buy it kind of down here. Um, but this isn't terrible. Like this range isn't terrible. I think a lot of people's cost basis is probably somewhere around here. So not amazing, but not awful. The company's probably worth more than like 20, 26 easily. Um, but anytime there's like negative news out of China, its price and broad commodities suffer. Um, so you have to remember that and then analysts are, don't have bright outlooks for BTU, which is good in some ways because it means that it's very easy for them to beat their earnings projections. And they're still paying off debt, which is, you know, it draws down on free cash flows a bit. If we get relief bounce on SPX earlier next week, before JPass speaks, how high would it bounce to? Test the 4450 level? Hmm. Based on the current interest on the chain, I would say we're not likely to move up very much. I know tomorrow's expiration is very heavily weighted to the downside again. Gamma's pretty flat above 4,400. So if we were able to claw back above that, potentially. Um, but it's 4450 is still a long way off. You'd have a lot of confirmation before we got anywhere near there, right? Because you could confirm at like 4,400, 4,410, 25, all before you have to worry about the 4,450 level. They don't want the tips to touch. What are they? Homophobic? I don't know. Maybe. I haven't been around lately. I just want to say hi and thanks. No problem, Yaga. Bouncing off again. I'll try to listen on 2x later tonight. Alright, I'll see you later. Have a good one. BTU is also buying back shares still. Yeah, they have $1 billion buyback, which is a significant portion of their free float and their market cap. I think their current market cap should be, oh, what is it? It's like 2.9 billion. So yeah, it's still roughly a third, a little more than a third of their market cap. Hopefully they affected some of it back here, but we won't find out till next quarter. Waiting out Hillary? What? Who the fuck is Hillary? Have you talked about potential for GME OPEX? No. Although I guess we could talk about it. There's some potential for one. GME is super fucking illiquid. Um, it stopped. We stopped getting expansion, but we haven't really gotten any contraction yet. They've maxed out their shorts on XRT, so XRT is pretty blown out. IJH is a little bit covered though, so yeah, we'll have to see how that goes. If we start to see like, if we start to see some contraction, that might be a little more enticing. I got some out of the money debit spreads on it just in case, but I don't think anything's gonna come of it. Is that the hurricane heading to California? I don't know. Hurricane Hillary? Oh, okay. Good thing the insurance companies all pulled out before the landslides. Can you talk about potential for other meme adjacent stocks to OPEX? Yeah, I suppose. This looks kind of interesting. Nothing's really happened on it yet, but I also picked up some calls on this. So top looks like it's due for a dead cat bounce. It didn't make it back to its prior level, obviously, after the debt renegotiation got announced. Um, we're starting to get expansion again, right? Or well, contraction there, expansion there. So this could have like another smaller breakout, kind of like that. I don't think it'll be as intense as the first one. The out of the money call interest is way lower, but yeah, even if it hit like 5, I'd be cool with that. But it seems like a good time to play the dead cat bounce. Volume's been increasing a little bit, so that shift in the volume trend might be indicative of something. Anybody else? Siri. I wasn't looking at data on. That's over. Fubo. maybe bouncing. Um, Although even like 250 at this point kind of seems like a reach, so it may not be worth playing, or at least not playing on the long side. But there's some potential that this bounces a little here. Um, Although this one's still very hard to determine. Upstart kind of looks like shit. Yeah, that's about it. I miss OPEX runs. Would looking for stocks that run significantly in the next 2 to 3 days be a good way of identifying areas of significant short interest? Could be. Although, generally, the bigger OPEXs happen with like the quarterly expiration with the ETFs rebalance and not with the like monthly OPEX expirations. So you usually like the big vol shorts like Tesla, Nvidia, shit like that. Those tend to run after quad witching. I was thinking like if the market is just positioned to test the 4,300 level, which was the huge breakout in June, maybe we get a small bounce to 4,410 until Nvidia earnings for better put reposition. Well, a lot of the puts have repositioned as of Friday, at least into tomorrow's expiration. I would say tomorrow's pretty well set up for a test of 4,350 to the downside, and maybe a test of like 4,325. It'll depend on how hard they fight back against it, obviously, but a lot of the short puts like out of the money expired on Friday, right? And so, all of that gamma is going to have fallen off, and the market maker is going to be repositioning going into the beginning of this week. I think the fact that they didn't get their breakout on Friday kind of puts them in a bad position again, and in a position where the downside is way more leveraged, and they kind of lost their foothold on the upside that they were trying to build back up. So they may have to let it drop back down and put the puts back in the money so they can try to run it off of put capitulation again in the middle of like next week. So I would say right now we look pretty. We have a pretty good setup for a breakdown, technically too, right? Off of Friday, which was basically just a giant bear flag. Pretty tame so far. This afternoon, evening is supposed to be more. Huh? Had no idea. I have family out there, so. Can you talk about why you don't think the market will tank before an SLD OPEX period? I mean, markets just don't crash until OPEX. uh, that's kind of true across the board. In August we didn't drop until OPEX, and then September really didn't drop until OPEX either, or after OPEX. March didn't drop until April OPEX. The 2020 crash occurred during Feb OPEX. Um, 2018 crash. Yeah, okay, this one didn't really. Well, yeah, it turned around on OPEX. Although this was due to the Chinese tariffs with Trump, I think. Um, Volmageddon happened after OPEX. The run up into it peaked during the OPEX settlement. Oh, hold on 1 second. Sorry, I had to go bring my neighbor's spare key. Yeah, I mean, oh 08, I believe. Are we back there yet? Where's oh 08? Oh 08 happened during August OPEX. So yeah, I mean, they kind of just happen on OPEX. I don't know if there's actually any significance to that, but it's a fun thing to talk about. Pretty tame so far. This afternoon, evening is supposed to be more. Oh, okay. What's going on with Etsy by the charts? I've kept half an eye on it, and it seems to bounce all around. I don't know. I've never looked at their stock in the entire history of its existence. Uh, it looks like crap. It's at long-term support, so maybe it'll bounce. Do people still use Etsy? What about J&J K-View options? Any changes seen there? Greeks? I mean, Johnson and Johnson's like dealer gamma or delta exposure has just been dropping like a rock. It's super fucking negative. I know a bunch of the call side interest fell off the chain on Friday, so mm, that might be significant. Although most of the positioning on it's been fairly neutral. And a lot of put positioning also fell off Friday. I think their distribution should be occurring over the next 7 business days if the offer isn't fully maxed out. But I think everyone's pretty much on the same page that the offer is fully claimed, and if that's the case, um, there should be like a 2 to 5 day settlement period for K-View shares as they're distributed out to the new owners. And hopefully that will see the remainder of the drop left in J&J, which I think could be about 170. It could potentially drop lower, but I don't know if it has yet. And then you know hopefully a rush of interest and a pullback in the short position on K-View as the arbitrage trade closes. Didn't we just have an OPEX? You get one every month. I would say the biggest risks with the J&J play are, that there's so much liquidity that the arb trade unwinds without very much price action. I will not pay 1 penny over MSRP for this hyper realistic suit. Cat suit? I see. Friday was silly. Series been journeying down, but still not broken 4. Still some quiet potential there. Yeah, although I think it may be some more time before anything's actually realized on it. We're watching the borrow rates. We're keeping an eye on it. I mean, most of this shorting has been synthetic, and they've cleared out like a lot of the short demand on the like prime broker and retail broker side, right? So the buyer rate and available liquidity has increased in the lending pool, but the ETF liquidity has dropped like a rock. So you know, if they're washing all of their short sales through ETFs, they're going to have to cover again down the road, right? Kind of like GME. And so, yeah, I think there's still an expectation that we'll see another run up on this, although I think it may be a little bit of time before we do still. This may be closer to like September. Has he mentioned anything about top? Yeah, it talked about it for a second. It looks like it might have like kind of a dead cat bounce. Are you not allowed to trade level 3 options on cash accounts at all? No. Yeah, no level 3 options on cash, especially not Webull. I think Fidelity lets you trade spreads on cash settled instruments in a cash account, but Webull definitely does not. I'm just here for very specific Chipotle Mexican grill questions. All right. Was there anything else that we need to talk about? A, B, and B, I didn't cut the short on. I'm staying in it a little while longer. Tesla, I did cut the short, but I re-entered at close on Friday. I'll go down to the 1 hour here. So I cut the short on the bounce. I think it was here. Yeah, I stopped out of the 0DT and cut the long-term short, and then I re-entered the long-term short at close on Friday. I'm starting not to like that one as much. I may cut that on Monday. Um, Although I'm not sure how many of you actually knew about the 0DT one in the first place. Now that I'm thinking about it, maybe nobody did. I may not have written about that to the majority of you. What about the Amazon short? I have to look. I think I got stopped out. Mm, that's awkward. I got stopped out on half of it. Ew. I mean, I still think it looks pretty shitty. Um, we probably have a little bit more time on it. There could be another re-entry opportunity on it if you already took profits. Maybe. Let me take a look at how much of the short interest pulled back. Yeah, see, not much. So I don't think Friday's bounce really did anything there at the end of the day. Um, Dealer Gamma still negative, or Dealer Delta still negative. Dealer Gamma still trending negative. Um, Charm slipped negative, so that could be a plus. And bot calls fell off as well, even more on Friday. So I think the bounce may have just been a little bit of like short dated put profit taking. I think the same thing for Tesla too. Um, Although if Tesla continues to go up in pre-market, I'll probably cut my slightly longer dated debit spreads on it. Amazon, I'll probably see if I get another entry opportunity. I still have some positions open on it. I'm not sure what I have left though. So let me check that real quick. I think I have September. I still have the September 15 130s open on it. And then the 134 and 132, I'm out of. I was out of the 134s pretty quickly, like right around market open. The 32s, not much profit on those, like 10%. The 30s I'm still in. So if this bounces back to like 134, 135, like this range around risk, I feel like that might be another good opportunity if you can confirm the rejection. If it starts to drop Monday, there might be another re-entry on a confirmed break of resistance to the downside. So maybe I would look for that for like another like short entry opportunity right here at what's currently the mid price target. And then that might be, a confirmation there might be the rest of the move down to like 126 here. That one I need to look at the options chain on more, but a brief glance would say that a lot of Friday was just driven by some short dated put capitulation. Given the current macro, is it time to cut losses on Jimmy or worth holding through earnings? I mean, I don't know if I'd sell it at historic lows, but if here's the problem with Jimmy. If indexes keep dropping, they're going to get more liquidity from sellers, right? From active funds selling, and then that means they could short longer without clearing out any of the liquidity that they've used up so far, right? And so, yeah, I mean, there's a chance that it could kind of chop in this range for a while, and that's why we'd be looking for it to like contract. If we start to see evidence of covering, but I don't feel like it's something I would necessarily sell in this range, right? It doesn't tend to last long at these lows. Even if the next pop brought us to a lower high, that's a better opportunity to sell than right now. Like say we continue to get shorted down to the next resistance at 17, and then we get a run and it takes us to, like 22 or 23. Um that's still a better exit than here, right? I would say that the macro is not currently favorable for GME, but it's not that bad for it. They don't have any debt. They're not taking on any debt. So they're moderately unaffected by interest rate increases. And video game sales tend to do well in recessions. At least the limited evidence we have so far points to that. If they lean more into into the side of their business that's a pawn shop, they'd probably do really well in a recession. Super secret Tesla DD. No. It was just a 0 DTE play on Friday. Um and then maybe some more debit spreads into next week. But I don't like the bounce in after hours. We'll see if that calms down into tomorrow morning. It may. If it does, then yeah, there's probably another opportunity to follow it lower. Thoughts on TLT being so low? I don't think it's ready to turn around just yet. Although we did get some interest in the 20-year on Friday. It wasn't It wasn't a lot. I sold all the short-term options for a nice profit. Kept one 130p 915 contract. Thanks for the analysis on the reentry. Yeah, no problem. Yeah, Amazon was good. Well, it it got you got kind of lucky too, right? Because the morning after we got that like huge spike in the like right at market open. So you got to short from like 137 and then, it just tanked into the next morning, so that that made that a lot easier, especially on short dated options. It wouldn't have been nearly as profitable if it didn't spike above risk really hard right there. When you're talking about being in and out of your positions, are you automated all those exits and entries? I mean, sometimes I just set like shit. I don't have time to manage everything, so I set like conditional orders or trailing stops on stuff that's already profitable that I don't feel like micromanaging. And usually I'll get stopped out. Sometimes I'll have a limit stop and I'll gap over a little bit of it. But generally speaking, I have some kind of like, measure in place to offset risk or to capture profits. And throughout the day I'll adjust them, but I watch a lot of it while I'm streaming. I mean, not everything, but a lot of it. For those still holding GME around 30, worth averaging down here and getting out in the next run to 24.25. I mean, it depends on how much you could average down. And I wouldn't say it's guaranteed that we run to 24.25. We could, but we need a big pump. It's illiquid enough that if it runs, I think, and it starts to get some covering, it could be a good run, like better than we've seen in a while. But you have to weigh that with the fact that there's like no fucking options interest anymore, right? Nobody's like buying leaps. Nobody's even buying like 30 and 45 DTEs, right? So it's tough. The short-term IV is picking up, which is a good sign. XRT looks like they need to do some covering. So a little bit of that may have started on Friday. So that could be a good sign. Like a lot of the things are pointing to GME having an OPEX, but GME OPEXs just aren't that fucking impressive anymore. So it adds a different layer of risk than in the past when we were just like, are we right about the timing? Now we could be right about the timing, and it still could be insufficient, right? GIS has been in a pretty big fall since May. How is this possible when cereal is $6 a box now? I mean, wheat and grain prices have been going up, and so they're paying more, and then they're paying higher future prices for the commodities. That's part of it. I mean, some of it's, yeah, they're profiteering on the backs of customers, but I mean, their costs are up pretty substantially. I mean, you just look at their balance sheet. So net income's taken a nosedive over the last two quarters. Um, Total operating expenses were up for quarter three, and quarter two, although they do appear to be normalizing a bit here in the after the quarter four report. Margins. Margins are, they were down for quarter three, up a little bit in quarter four. So it may be a little bit of time till some of that's realized in their earnings. But I mean, yeah, increased grain prices are not are not good for General Mills. And I mean, look at like soft wheat. Soft wheat prices have rocketed. They've continued to go up since like hold on, I gotta get a different chart for this. Yeah, soft wheat prices rocketed all through June and July. They're starting to come back down a little bit now, but they've been massively elevated since like the beginning of last year, right? And so they've been buying futures on this in contango at much higher prices, in order to lock in the price in case prices go higher, and that's a big cost for them. 256 watching. Okay. None of them have liked it though. I think tech will bounce the market up this week. Meta, Tesla, and Nvidia looking bullish. Are they? I don't think any of those are like particularly bullish. I mean, these all have like a recovery, but none of these have a confirmed bounce, right? Apple doesn't have a confirmed bounce. Meta doesn't have a confirmed bounce. I mean, these are just bear flags, right? From a technical standpoint, these are all aggressively bearish. Thanks, Greg. So, I mean, I don't necessarily disagree that we can have a bounce this week, but based on what? Yeah, Petrotsky scores fine. It's Z, like Altman Z is a little more accurate, or Zimajewski, if you want to look at those. You can just look at price to book ratio. Anyway, for this week, for SPX, which is probably what we should be looking at, we're still very much below delta neutral. I don't think delta neutral fell very much on Friday. I know fast gamma moved up. It looks like delta neutral dropped a little bit, but only like $6, which isn't very bullish. And then gamma neutral actually moved up, as did gamma max. So I would say that out of the money call selling increased on Friday, and there wasn't really a big shift at the money. Like there was more at the money call buying, but not a lot more. Delta, like dealer Delta and Gamma turned up, but Vega remained in its uptrend. Charm moved negative. And so the effect of that will probably be felt tomorrow, at least in the early part of the day. But yeah, I mean, no significant positional changes that would indicate we're going to see a lot more upside, at least in the early part of this week. Now, after SLD is completed, right, and we start to move into the settlement period of it, um, like tomorrow during the trading day, Tuesday, Wednesday, then we might start to see more interest come in on the long side. But I still think that they're going to want to leverage like a lot of put capitulation, which they tried to do on Friday, and they weren't really all that successful, right? I mean, we ended up closing the day still down, like it was still negative on the day. Um, and although they were able to reverse the trend and capture some of that momentum, you know, they didn't really get anywhere with it. Like we didn't cross any of the major levels, and futures, you know, is still below 4,400. Um, and then you know in the after hours session continued to fail even after the breakout of like VWAP there. So yeah, I would say this looks all looks to continue its bearish momentum into Monday. And then I would say repositioning at the end of the day tomorrow into the early part of Tuesday will probably start to stagnate a little bit at some point this week because we have Jackson's Hole, right? So um maybe tomorrow's the best opportunity for us to see the bottom of the put interest, and then those will capitulate and we'll probably find stability at a slightly higher level. But I would say right now, pretty good chance we see range all through here. And then probably a move up into the middle part of the week, between like 43.60 and 80 as neutral positioning comes in. Unless we get like a big like OPEX run, and you know, hopefully we'll have some idea of that if we start to see volatility fall off really hard, right? And they start to position out of the money calls more aggressively. Like, don't buy a company being priced at 150 times their cash flow. Cough, Nvidia, cough. I still have a feeling that Nvidia is going to report like a bunch of earnings that they'll never see this quarter, right? Like all the chips that they're selling to China, but they're not allowed to sell to China, and the Department of Commerce is going to block the sale, but they're still going to report them as sales. And the Saudis bought a bunch of chips to sell to China, so that's bullish. I don't think Webull has it, Miv. You can look at JJG. I think JJG is like an ETF that's like split exposure. It's like broad grains and soft wheat, but it's maybe a little more heavily weighted for hard wheat than soft. Yeah, but otherwise, I don't think red and soft wheat. I don't think you can look at like the commodity prices on Webull. Gotta love it. Sounds like Nvidia Enron. Well, it'll all come crumbling apart at some point, but not yet, I guess. Although, you know, so even though they've negotiated and contracted those sales, I feel like they're really remiss in disclosing to investors that those sales might be blocked by the Department of Commerce, right? Yeah, it's very much misleading shareholders, and I don't know. I guess we'll see how they report those earnings. I mean, last quarter was just like them reporting earnings that like they hadn't even received payment on, right? And reporting reductions in inventory that hadn't occurred yet based on future sales that were, you know, still in negotiation. So I really don't know how far they're willing to go. You'd think that like now, after 2 quarters of reporting those forward sales, they would have finalized some of them. I mean, look at their gap. Like their gap metrics are fucking awful, right? Their non-gaps look like the company's made out of gold. The auditing process is only improved. Yeah, sure. What would Nvidia tank to if it was Enron? Oh, like if they come out this quarter and they're like, yeah, so all of our sales that we'd projected got blocked. Um, Jesus, who knows? I know the like the deal for the H100s was like several billion dollars, right? What are you using to pull up futures? This is Trading View. Epic pullback to 500. I mean, if none of those sales over the last 6 months came to fruition, or a big chunk of them, like 30 or 40% of them, were blocked, I mean, Nvidia's stock price would crash hard, right? I mean, they're being priced on like hitting 500x their prior earnings over the next like 3 to 5 years, and all of that would be immediately repriced. So yeah, I mean, Nvidia earnings obviously still the play of the century in either direction. It's not so much crime as it is just like over exuberance in their accounting metrics, right? Like they're like they were sitting on like fucking, what was it, 50 billion in inventory of like the 4 series cards, right? And then those just were repurposed and disappeared, but they didn't sell them. So they just like shuffled them around and then said they were selling them as like AI chips. Which is fine. I mean, they probably just have to like flash the BIOS to convert them, but then they're, all of those sales are based on potential sales and not finalized sales. Meanwhile, TSMC, who makes all their fucking chips, is like, yeah, we're not selling anything. We're not making anything. No one's buying anything. Our revenues are nosediving, right? As is our output volume. And so if NVIDIA is selling all these fucking chips, they aren't even made yet. I mean, if just looking at like the input output, it doesn't make any sense. There's a lot of creative accounting taking place. There's no question about that. FUD. TSMC is lying. They're actually killing it. Their fabs have never been run harder. They just don't want people to know. Circumventing international trade sanctions, like, it'd be disastrous if someone found out. They'd be fucked. We need to contradict Nvidia's stellar earnings. I feel like that's kind of like the canary in the coal mine for Nvidia, right? Is the fact that TSMC is doing so poorly, and yet Nvidia is supposedly selling more chips than they ever have in the entire history of the company in 2 quarters. Like, their combined revenues across the entire existence of Nvidia don't even come close to matching the expected revenues over the next year. I'm still running my 980. It's still better than most mid-range cards out right now. I ran my 980 Ti for, well, up until like the year before last, or last year. TSMC makes all of their important chips. but none of the fabricate like ASMR or whatever the fuck they're called. They're not their production's way the fuck down too, right? Or it's not ARM, right? ARM was down. Intel's fabs are they're not fucking making any money. AMD's not making any money, even though they sell all the fucking processors for the same like infrastructure upgrades that Nvidia is claiming are going to make them trillions of dollars over 10 years. So like none of it makes sense, right? Like you've got $1 trillion in infrastructure spend on upgrading to AI across the board, right? But meanwhile, TSMC is not manufacturing anything; their output's garbage, and AMD is not selling any fucking processors either, right? So both of the other companies that would be significantly involved in that process are doing terribly, but Nvidia is doing amazing. Like it just doesn't add up. It doesn't take like a genius to look at that and be like, this something's off. Samsung made some, yeah. They make the RAM and shit, but yeah, their fucking manufacturing's down like 100% year over year. Samsung was really bad, right? I think they make like the RAM, like the GDDR5. TSMC also producing AMD, right? Yeah. I mean, Nvidia repurposed their inventory last quarter. That's one of the reasons their earnings look so good, because they weren't sitting on that fat fucking stack of 4090s that nobody wanted to buy. So I mean, it'll be interesting. I don't know how much longer they can keep it up for, because the projections, like, they just get more and more ridiculous as time goes on, right? Their estimate is $2, $2 a share EPS, and their last quarter earnings were $1.09, and the standard, like, the gap was 82 cents. So this quarter, supposedly, they're going to more than double their EPS. And they're going to bring revenues to 11 billion, right? That was their projection. Yeah, 11.14 billion. I'm still running whatever the fuck I got 10 years ago. And in the next 5 years, all the big boys in the Mag 7 will furiously push to build their shit in house. Yeah. Well, I mean, because Nvidia's profits on the H100 are ridiculous, right? So they have to, which means if if Apple and Microsoft and Google are all gonna like butt their way in on like what existing fabs there are, that's gonna slow down Nvidia's production, right? Or the rate of production for Nvidia and AMD. So even if their demand were this high, they'd never be able to keep up with it. I think Samsung made some of their low tier mobile GPU chips, 12 or 14 nanometer. Oh, okay. When the video are found out, will the price realization be violent or just drawn out? It'll probably be really violent, yeah. Those analysts are so fucking stupid. Last week, someone upgraded Nvidia to like $800 or something. To like a true $2 trillion market cap. Yeah, that's problematic. Were all these analysts born in 2016? I don't know. Meanwhile, we're like sparking a trade war with China, right? Their trade department came out with a demand that we ease up on like aluminum and steel restrictions on trade. Like China's economy is shitting the bed all over the place. All of their real estate developers are fucking missing payments on bonds still, right? Like, no resolution to that. They're cutting their rates and pumping up their quantitative easing, but their economy's not doing anything, right? And their debt to GDP ratio is just gonna skyrocket if they pump more money into it. China trade war, Russia actual war, Japan money war. I mean, eventually, given enough time, Dork, we'll probably try to ensure that all of those just become actual wars, right? What's the fallout of Evergreen filing Chapter 14? Evergrande? I mean, they'll try to pay out their debt. They filed Chapter 15, didn't they? China's a sleeping giant that will destroy the hedgies. RC said so. Hedgies that are over leveraged into China because they listen to Ray Dalio. When will shorting the video be a pickles pick again? I mean, never, but I'm still shorting them. I've never stopped shorting the video. I've just also bought calls sometimes. I still have like underwater September puts and a shitload of January puts. I made some money on the recent drop. Finally. I actually finally made money on puts on the video. But I've still got a lot more. I mean, I'll just short it until I can't short it anymore because when it fails, it's going to be spectacular, right? I mean, Chapter 15 is usually for like companies that exist in another country. It allows, I can't remember. I think it allows like foreign debtors to lay claim or some shit or file within their own jurisdiction. I'm not a bankruptcy lawyer. Anyway, yeah, Nvidia's earnings they'll be something. I wouldn't be surprised if it pumps into earnings on speculation alone. So there might be a play there. I know last week we kind of saw we saw a little bit of hem and haw at like the 4:30 strike. Like sellers kept selling options, like calls. Buyers kept buying calls. Overall, call interest has been declining, but after the expiration, we might see some of the sold calls pull back that don't want to carry the risk into earnings, right? And then if that happens, that'll probably drive price action back up again. It tends to have a pretty positive impact on price. So we might see Nvidia bump back up to like the fuck, I don't know, maybe like the 450 range going into earnings. Or people just sell even more calls and they'll sell them deeper in the money because they're not convinced that Nvidia can beat earnings again. All right, let me see what Dork and Jay Fresh are up to. Hey
$480 billion in
guys,
June.
What's up, Garrick?
Hey, what's going on?
what's up?
We're just we're continuing the pontification about Nvidia's earnings and how it could still be good.
Yeah, no, I don't disagree. I think they could report well. I don't know. I feel like if they start reporting the sales to China though, they're really they're really playing with fire, right? Because if the Department of Commerce blocks those sales, which I mean, they're technically not allowed, right? Um per the executive order. Like right now, those sales should already effectively be blocked, and if they're gonna count those as part of their fucking earnings, um, yeah, that's I don't know, it's a lot of risk.
Well, did they ever? I know they talked about enhancing the limitations because right now they have the A100 and H100 that are their big AI sellers,
Yeah,
and they've just like nerfed them and called them A800 and H800 and continue to sell them to China. Have they
yeah.
blocked those? Because they haven't
Well,
blocked
that's
those.
what the Department of Commerce is currently debating, because they're undermining, like they're directly undermining the intent of the law, right?
Yeah,
By trying to circumvent it. And if they are doing that, the Department of Commerce can just come in and slap a restriction on all their sales, and they're fucked, right? And then they've
yeah.
reported all of those sales, which is crazy to me, right? Without in like letting shareholders know about the inherent risk.
Yeah, I mean, I think the guidance is going to be the most important thing to look for here. I think everybody, I don't see any reason for them not to beat, to at least meet, if not beat earnings. Like I was just talking with Dork before you got on. They're clearly supply limited, and the supply chains are actually working in their favor right now because there's so little demand for pretty much every other type of chip, um, that TSMC would be motivated to move over whatever they could from other product lines and to increase the capacity of the
But
NVIDIA stuff.
TSMC's like AI chip production's down like 30% the last quarter.
See, that's what we were trying to dig into was, their numbers and because that's the only other place where you could really get a sense of perhaps what level of revenue Nvidia
Yeah,
is going to be able
it
to
wasn't
capture.
it wasn't just like their broad production that was down and like individual components of it were up. Like AI chip production took a fat hit.
Yeah, that would be strange because I mean, it sounds like from what everyone's saying that Nvidia's got orders pretty much they can't fill them for
Yeah,
like a
right.
year out, right?
Because yeah, but no one's TSMC's not making them. So it's, are
But
they
that
ever going to be
see
able
that
to fill them?
but this is what doesn't make sense to me, right? If TSMC is not making other chips, they're motivated to make whatever the demand is, right? NVIDIA has more demand than they can supply, right? So why would I guess I don't understand why
Well, because Nvidia's got more sales, right? But they haven't, those sales aren't finalized, and so they haven't put in the orders for those chips. They've reported the sales, right? But without those contracts being finalized, they're not going to order the production, right?
wait,
And so
the
no production is being ordered, but sales are being reported.
how does that work?
Well, it shouldn't. Well, at
So I
least
mean,
not without a disclaimer of some sort. But I mean,
so
they did say that those sales were the sales they were counting in their last earnings were future sales, right? They were based off of their
Well, so
projections for sales, but not. Yeah, fraud is one way to describe it.
so here's my thing. Here's my bugaboo with Nvidia's big fat pile of POs they're sitting on. Okay,
Yeah.
so let's say they have $10 billion worth of AI, whatever they got to sell, right? Or
Hmm.
that they sold, and then now they need to go and get those produced, okay? Because they don't have the inventory for it.
Yeah.
They only have $5 billion cash, right? And they have $11 billion of total debt. So if they want to go and fulfill those POs and actually place the orders to TSMC or whoever to make those chips, they're probably going to have to finance it.
Oh yeah. I mean that's kind of the same thing that I was shorting on like FSLR, right? Is like FSLR didn't have the production capacity to meet the demand for their solar panels, right? And so it was like an easy short because as they started to deploy capex to increase production capacity, they would be accruing debt and lowering their forward earnings quite a bit, right? And so I mean I'm still shorting FSLR because of that. Because yeah, they have an order book that's like 2 years deep, and they have nowhere near the production capacity to meet it in those 2 years. So they've got to spend a shitload of money to ramp up production. Except Nvidia's not really in a position where they can spend money to increase production capacity because they don't manufacture anything, right? They're completely reliant on TSMC. And TSMC is kind of like their production capacity is already kind of capped, and they're not producing anything right now, right? Their production's way the fuck down. But even if it were to be, you know, bolstered in the coming months, they can't produce that many AI chips that fast. They don't have the fabs for it, and the fabs take like 3 to 5 years to like
Yeah,
build out, right? So,
the
uh,
fabs take a long time. Yeah.
how the fuck are they gonna fill? How the fuck are they gonna fill an order book that deep if they don't even like? I don't know if they were banking on like the fabs in the U.S. being finished because then TSMC delayed those after the fact. Um, I think TSMC's pushed their like US fabs now out to like 25, 26. Because they came out with a report like a month and a half ago that they can't find, sufficient skilled labor to even run the fucking fabs in the US.
Oh yeah,
Yeah.
yeah. I
And
I've actually trained in, I can train students to run in fabs, and it's just been incredibly difficult. It's mostly foreigners that are interested in micro nano type things,
Hmm.
and they get shipped away at the end. Like ever since Trump, and it hasn't really gotten any better under Biden. It's been really difficult to retain that foreign talent here after they graduate. Um, and so we basically pay them and train them for free on our dime, and then we ship them away and say go compete with us globally. It drives me fucking nuts. So it is not a surprise to me one bit that they can't find anyone to work these fabs because we ship them all back to their countries.
We should probably open up our immigration policy a little more. I don't know how much like power Biden has to do that with a split house, but yeah, there's a brain drain there and in a few
It's been
other
this way.
industries as
It's been
well,
this
right?
way for at least 20 years. It's gotten
Uh,
worse, but it's always been a huge problem, and it's blown my mind. I mean, I know the pushback is safety, right? It's the DoD is wants to make sure that everybody is overly vetted so that there's no like espionage, but I mean, there's got to be a better middle ground because we need these people, and they want to be here. They don't want to go home. They want to be American.
yeah, yeah. Well,
Anyway,
yeah,
that's that.
I
But
just don't like.
so I'm looking at TSMC's basic last quarter, and it's I would assume, and maybe this is wrong, that all of Nvidia's um,
AI chips are coming through them.
A,
They are.
AI chips.
Yeah.
Well, no, AI chips are are categorized under high performance computing.
Yeah.
Okay, so that's down 5% year quarter over quarter, but it's such a large slice of the pie. It's like almost half of all the chips they make. So I mean, you could make an argument that if the high performance computing demand from other sources has gone down, but NVIDIA's has gone up, right? The
Hmm.
overall HPC could go down, but NVIDIA's
But it,
production could go up.
but it can't, right? Because here's the issue I have there is the build outs. Like the build outs require CPUs as well, right? So there's all kinds of other infrastructure components, and TSMC would be manufacturing the AMD CPUs that would be going along with the NVIDIA GPUs, right? And the demand, like AMD's demand, is way the fuck down. Like they're not projecting anywhere near the kind of sales, and it should be relatively like one for one, right? Like NVIDIA should be, AMD should be selling chips to for these build outs just as fast as NVIDIA is selling them.
Yeah, I mean,
Like, what about all
I'm
the
just
other
trying.
components? And like, we're not seeing any like momentum in the manufacturing side for anything in that industry, and yet NVIDIA is reporting like off the charts sales across the board.
You could argue though, that the cloud services and things already have plenty of CPUs that they can use in conjunction with more GPUs that they're buying. So I think the argument and people. So I think right now NVIDIA um, captures about 6% of the capex in large scale cloud infrastructure, right? So 6% of all the shit they buy to make a big server
Yeah,
is GPUs essentially. And the argument from AI bulls is that they're going to start capturing upwards of 25% of that total capex expenditure. I can't even say that without laughing. I'm sorry.
that's fair.
Um, and so, yeah, I'm just trying to look at, what the data is really telling us, and if there's a way they could have snuck through. And it is possible. It's still unusual. And I was doing some digging last night, just trying to figure out because at some point somebody has to start making money uh, doing all of this AI garbage. But we're definitely still at the point where people are just throwing shitloads of money at vaporware, right?
Yeah,
If I was reading articles. A lot of this is coming from VCs, and I was reading articles about. I guess as of like January of this year, AI was like, and when I say AI, I mean generative AI, like Chat GPT type things. They were generating revenues on the order of like $300 million,
hmm,
and they were also predicting that the revenues from generative AI would be like $40 billion in 2023, when last year's like 300 million, and that's revenues. That's not earnings, right? Nobody's making any money yet
yeah.
doing this, and so
Half the
I was
shit's
just.
open source anyway.
Well, that's yeah. So that's the other issue is like, what's the moat? But I was looking at comparing. There's people getting that if they were not an AI company, they would not get any funding, and they're getting like billion-dollar valuations and things, and they're just throwing money at them. They're going for like their Series A like way too early and getting plenty of funding. And if you look at anyone else that's not AI, it's like a barren landscape. Nobody's getting any money unless they're AI. And so, but the point is that people are throwing money at this, and this is the phase where you build out capacity, right? So you have all
Hmm.
this money. You think about this. You think about you're a Google or you're a Microsoft or an Amazon. You don't really care. You're not trying to like design and build AI. You're just buying the NVIDIA chips to sell the CPU time to all the morons that are throwing money at it, right?
Yeah, yeah.
And that's where we are in the cycle. And that's going to continue until people just start getting sick of losing money. And it might take a couple quarters, but I could see this lasting through the end of the year before people start going, all right, we need to start seeing some money.
Yeah, when is when is Nvidia gonna have the actual cash in hand and product delivered? That's my question. How long can they keep going saying that they're going to deliver, they're going to meet this demand without actually doing it, right?
Yeah,
Like, I mean,
I
you
haven't seen
can't
a run on the money yet.
report that many quarters forward and expect to still maintain your valuation if you're not making any progress towards that goal. And if they're reporting sales that can then get blocked, that's even worse.
So,
I'm not saying they can't meet the sales numbers. I don't actually disagree with you there. I think they can. I think they could hit the 11 billion in sales, but those products still aren't delivered, right? They could still those sales could still be blocked. And if all of like if any of that happens, it's the price of the stock's gonna crash. If it crashes from 600 or 800, even better, right?
Well, like I don't see where the money's going to come from. Like if they could meet the sales, but once again, the moment they do, the effective yield on AAA is 5%. So they're going to take a 5% hit on their margin just by fulfilling the sales outside of what they can
Are
directly order
Nvidia's
with cash.
tranches even AAA?
I feel like at this point they are because ratings agencies are stupid, but I don't know. I mean, even so, I'm just saying best case scenario for them, they got a 5% hit on their margin on at least some capacity of these orders,
They're
unless they
A1.
like okay, so it's even worse, right? So they're
Yeah.
looking at like a 5.5-6% cut on margins, and
Yeah.
like that's I mean, I'm sure their margins are better than that, so they're not going to be like negative on those by any measure, but that's still a huge hit. And I don't know how much of their cash they're going to want to burn on these new orders to TSMC, right? And like where are they going to get that money? That's just my real
They're
question,
also
right? Like,
refinancing all of their revolving credit lines too this year.
yeah, they're like that's so their margins are about to get hurt. So I guess that's where the money's going to come from then, right? Is their line of credit. And my fear with Nvidia is that they're uh, sort of in a lightweight way doing the thing that like early companies do where they grow themselves into bankruptcy.
Yeah.
I don't know. I don't think they're going to grow themselves into bankruptcy, but they're going to grow themselves into severely impacted margins, and it's going to be a tough hole to dig out of while interest rates remain high, and until they can get the cash to actually lean less on their financing, right? But if they order a whole bunch of these chips and then the volume dies, then here they are sitting on a bunch of high interest debt that they have to pay off without enough sales to sort of make up that interest, right? It's just I just don't see this being a very good outlook for them cash flow wise until either the credit market eases up or AI proves itself to the point Jay Fresh was making. It proves itself to be actually a money making venture, right?
Yeah.
Until either one of those things happens, I just think it's you're taking a huge risk by loading up on inventory on these chips, especially with debt.
This, so I was telling Dork before we got on that, asking him if he saw me get drunk last night and go on a rant about AI again. But
You do love to do
it's
that.
I do it a lot. Because when I was digging through the trying to figure out is anybody making any money from any of this stuff yet, and I started getting onto like VC news articles and things and interviews with VC folks. They even like specifically called out the connection between crypto and AI in terms of like the cyclical nature of VC spend. Like
Hmm.
they jumped into crypto and then moved to AI, and they said they've swung back and forth multiple times at this point because AI has been around a long time. So generative AI is particularly the thing that they're focusing on right now, which I think is not going to really go anywhere fantastic. You'll get a few chatbots on like travel websites and stuff, but it's not going to change the world in the next 3 or 5 years at least. There's a lot that still has to be done. But just looking at how look at crypto and how little it's produced and how long it's survived, and you can imagine how much money. The difference is that crypto, you can kind of raise your own cash, right? You don't have to necessarily start with VCs or leverage them a lot. You can just sell a bunch of shit tokens and people will buy them.
Yeah.
So here maybe it won't last quite as long, but there's a lot of similarities, right? It promises everything with no specifics. It's delivered nothing so far other than hype. And here we are. So yeah, so I mean, to piggyback onto what Dork just said about demand, I do think in the next few years demand's going to fall off, right? I mean, mostly I think most of the purchases for NVIDIA chips are just FOMO, people that are running cloud infrastructure, people who are doing, research. They don't want to look like they're falling behind or that they cannot provide future services that people are going to want to have. So they're all just buying the chips just to say we have them, and if people want them, they can use them. But I think that demand's going to fall off. And if they end up with an inventory issue, I mean, there's really no other reason to buy these GPUs. But I think in a larger sense, that's NVIDIA's problem, is that they've sort of hit the point where their conventional revenue streams, they've already pretty much hit the top, right? No gamers don't really need anything better, right? They're just at this point they're just getting annoyed that the cost is going up, and now it's like, oh, now they have to get new power sources and stuff just to run these stupid cards, and they're like, I'm getting 60 frames a second already, why do I need this? So nobody's
240.
whatever, right? I mean, it's
Yeah.
stupid, right? And nobody wants to spend $600 to $1,000 on a chip they don't need when the $300 one already performs 3x better than anybody could ever want. So their gaming thing's dying, right? Crypto, they rode the crypto wave for a while. That's dying, right?
Mhm.
Even if crypto sticks around, it's all proof of stake, which you don't need. You can run on a Raspberry Pi. You don't need a GPU. So I feel like they're just kind of at this point where they're like, well, we don't want to die, and we don't want to. We need something to innovate. We need something to continue pushing all this processing power onto people, and so they just basically jumped on the biggest processing power thing they could find, which is training trillion point neural networks. So I think they're just kind of running out of innovation, right?
So there is a revenue stream for them outside of, well, not really outside of, but adjacent to gamers. So generative AI is a great way to design video games. So like, let's say you want to build a gigantic map for a video game. Generative AI, I think, is really great for that. But that alone is not going to be enough necessarily to float NVIDIA at the valuation it's currently at. I see that being like a 10 billion, year over year thing at best between all the major game companies that want to, design on like Unreal, which they're using, generative AI to build like sections of maps and all those things. But, outside of that, like, in terms of like big data and all the, hype around generative AI transforming the economy, I just don't see that growing as quick as people expect it to. I don't think the applications are there.
I just
So
don't think it's going to transform the economy.
it's not gonna. It's gonna transform gaming. That's what I'm saying. That's about it. But
Well, so like I hear this a lot. people often, it's really common because Paul Krugman famously said the internet isn't going to do a whole lot for, economic growth. It'll be as useful as or the fax machine or something like that. But what he was really saying was it's not going to dramatically boost productivity beyond like the productivity gains we already saw before the internet, and that actually turned out to be pretty much true. There was a little bit of a bump at the beginning of the 2000s, but for the most part, productivity gains have been roughly what they were before, right? And so it's kind of the same thing. We're not going to be able to. It's I will say it is extremely unlikely to bet that this you know really expensive chatbot is going to so dramatically increase productivity that it's going to change, the trajectory of our economy. I just don't see that happening.
Well, it's not just a chatbot. It's the hype is around AI in general. The chatbot just brought it front, like, front of
No,
mind.
generative AI is basically a chatbot. That's what it is.
Like, I guess. I mean, there's, there is more to it than it is a chatbot, but it's an input output machine, right? It's a black box where you put something in and you get something out. And that's really like that's what people are betting on changing the economy. But like you said, I think if anything, it could be a boon to GDP, but not to overall productivity, just like the internet.
That'd be bad. I mean, we already have that problem.
Yeah, but for us normal people, we'll probably get some better looking video games, some better designed levels, and a little more diverse, sort of experience. But outside of that, there's not like I can't like just go and imagine a world where a dude has a black like an engineer type, a skilled laborer has a black box that he can just input stuff into and then create a product directly out of that black box, right? But what do I know? Anyways, I feel like
Nvidia's debt does not look very healthy.
no, it doesn't. No, they
Their
have twice
bonds
the
their
debt they have
bonds look
cash.
awful.
Do they?
Yeah. Most of them are down like 4% year over year or more.
Yikes! Big yikes!
Yeah.
Sounds like people aren't actually bullish on Nvidia.
Someone's not.
The whole bond space is weird though right now, dude. Like
True.
it's been super weird watching people, half shill bonds and half say that bonds are shit. Like I don't understand what the narrative is around bonds these days. People are like coming out saying these yields are incredible, man. You should jump in on these yields. And then the other people are like, oh man, the bond market's not going to recover for a while. And it's like on one from an investor standpoint, a high yield on a bond, right, looks attractive, but there's a reason why the yield is high.
I mean,
Well, I mean,
their
I think
yields aren't great.
the people who are bearish just think the yields will go higher, right?
I
They
mean,
don't
maybe.
see a reason. I mean, with China's got to sell treasuries, Japan's got to sell treasuries, the Middle East
I
has
mean,
been selling treasuries.
they're like
We're selling. We have to sell treasuries. Everybody's got to sell.
their
So
non-current and like goodwill assets are in excess of their current assets.
That's bad.
who are we talking about?
Nvidia.
Nvidia. Yeah, I guess they're.
Yeah.
It's funny that we're still spending so much time talking about Nvidia, but we're literally. I feel like we're right back to that point where we were at the start of all this mess. Nvidia is going to dictate the short-term direction of the market.
Yeah, I think it's important to focus on, right? Especially with all the other like tech earnings being so mixed, and Apple kind of shitting the bed on growth projections.
Apple was crazy. That was I did not expect them to miss that hard.
I mean, I expected their growth to contract because they don't have anything. They haven't made a new product in like fucking 12 years. Right?
Well, they made a $3,000 VR headset.
Yeah, but no one's. Do you know anyone who's bought one?
fuck
Have
no.
they even started actually selling them,
I
or
don't
did they
think
just
so.
announce them? Yeah, I think they're still producing them.
Even if they do release them, no one's gonna fucking. They're not. It's not gonna like have like widespread adoption, right?
It's gonna take a while if it does. Yeah.
Yeah.
Yeah,
No, I don't know. I
Northland
upgraded
Trader
to
just
the.
put out a video that August corrections are rare, and when he looks back, each time they happened, the market pumped into the end of the year. Oh, and each time was a pre-election year. Sometimes JFresh wipes his ass from back to front too.
Yeah, I'm not gonna say I've never done that. I don't think I have, but
When you have, has the market corrected into the end of the year?
yes, every
Okay.
time.
All right. Well, fuck. DD confirmed.
No, I mean, sure. There is a there for every for every statistic that people can come up with of like this has never happened in the last 10 times the setup has happened, you can find the same thing. You can find the same number of firsts, right, that have never happened before in a certain situation, right? It's just statistical bias, right? Just because it didn't happen the last 9 times that these indicators
It's
were in these places,
observational bias.
it
Bruh,
doesn't mean
Yeah.
it doesn't mean it's statistically robust. And the fact that there's no like real mechanical reason for why that would be so means that you should probably just ignore it. I mean, you should always be ready for the market to move against you, but I
bro,
wouldn't.
bro, 10 years after the yield curve inverts, the market is higher than it was. All right. Let me tell you, 100%.
Every goddamn time.
Every time, dude, I tell you, every time the yield
Wow.
curve, within 10 years, the market ends up higher than it was.
Son of a bitch. Except 08, right?
Oh, I mean, well, QQQ in 2000 was maybe a, well, we're going to ignore that one. All right. I mean, most odds are still pretty good.
If you ignore 2000 through 2010, and you look at all other times that we've experienced yield curve inversion 100% of the time within 10 years.
Oh, yeah, dude. Well, it just within 10 years of anything ever, or actually, sorry, within 15 years of anything ever, the market ends up higher, except the Great Depression. We're gonna ignore that one.
Oh, okay. Just as many hoops as we can jump through to make this valid, right? That's the problem
Yeah,
with a lot of like the economic shit and like YouTube shit you guys bring up from like Twitter and like social media is that like they're just jumping through hoops to like confirm a bias. But it doesn't actually like none of the shit they're saying means anything. Like look at all the economist JFresh trolls where they're like, well, if you remove all of the prime drivers of inflation, inflation's flat. It's like, well, fucking of course it is.
yeah,
You've removed all the things that are additive to inflation and been like, well, look at this value.
yeah. If
Yeah,
we if you ignore the inflation, it's not inflation.
Yeah. If
yeah.
you ignore
My
inflation, it's just not there, guys. It's okay.
my favorite is when people plot like wage growth and GDP growth and all of those things and show that like, oh, everything's going great, it's a strong economy. And my favorite response is now plot productivity and make the same argument.
Oh, I got a chart here. The
Ooh.
last chart I posted is because the Fed started putting like wage growth tracking into their data sets. And so what I did is I took their unbiased median hourly wage growth, the 3-month moving average of it. I weighted it against the sticky CPI.
Oh, that's
And
fun.
oh yeah, let me tell you, when people talk about wages growing, right? I mean, that is a very debatable
Well,
metric.
they're higher than the bottom.
Yeah, God, Gert, I'm gonna slap you. I'm gonna slap you because I mean to say that wages have recovered is just patently false. I mean, even since the boom out of '08, wage growth has not really kept up with the CPI if you integrate the curve, right? So I just I there's so many metrics and like I get it, I want to root for the economy as much as anybody else. I want to see growth. I want to see safe, investments and all these things, but you just look, if you just look at some of the fundamentals, it looks like people are hanging on as hard as they can and pushing as hard as they can to protect their nut, and that's about what you see. You
But
don't really
Dork, if you
see.
look at 2022 through now,
You see a negative number getting less negative.
yeah, that's growth.
That's just the absence
Ah, la
of
la la
shrink.
la 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 la.
Fuck you, man. Yeah, it's we're just not
How
really
dare
like
you?
we're not really like seeing just, I mean, we're not even seeing wages really keep up with inflation, which is that zero line, right? They're just starting to keep up with inflation now.
Yeah,
But
but the Fed
but
doesn't want
that's
wage inflation, even though wage inflation would solve a lot of the issues that inflation is currently creating. Businesses don't like that. Also, wage inflation means growth contraction, right?
yeah,
Which then doesn't look like a healthy economy, even though it is.
yeah. No, the happy medium is these oscillations around the zero line, right? Because that means that like if you're just, if you're pinned at zero, you can imagine two parallel lines, one being CPI and one being hourly wage growth.
Yeah.
So that sort of that oscillation is what would be considered a healthy economy, where wealth, like median wealth, is growing at the same rate as as prices, right?
Yeah, I think usually they like it to be like 1 or 2% above in inflation.
Ideally, that'd be great for everybody, but
I think
then
that's kind
it
of what
becomes.
they're looking for. It's a healthy, sustainable growth because then wages are rising, like real wages are rising relative to basically what that indicates is that productivity is improving the lives of everybody, and those wages are trickling down to the workers in a sustainable fashion. But
It's just not going to happen. I mean, the thing is if wages outpace inflation, inflation's going to come right back, because as consumers, we just love having shit.
Yeah. Yeah.
So yeah, it's a tricky thing, but at the same, like this sort of charts like this sort of tell you though that especially with how hard inflation went over the last little bit, like we had the highest inflation we've seen in a long fucking time, and wages definitely, at least at the median, did not keep up. So we're not seeing like a recovery. We're seeing a almost like a balancing out, right? We're seeing the rate, like growth rate, matching. And that's not necessarily a sign that our economy is becoming healthier. It just means that it just means that the consumer is now getting squeezed at a consistent rate.
Do we want to talk about the desperate attempts to get the volatility yield curve under control over the last week and how they've continued to fail?
oh my gosh, it's been cathartic watching it.
Oh yeah, it's beautiful. The especially, so I didn't really actually go and dig into the whole carry trade thing until the yield curve loosening in Japan, like that rumor sparked that huge downturn. I was like, holy shit, this might be bigger than we think. I mean, Girk, you probably knew that, but I didn't really take it too seriously. And then when I dug in, I realized that this is the tool that is likely to be used by authorized market participants and such, people who, I guess more or less, people who issue margin,
Yeah.
right? This is how they generate yield, is by seeking out the seeking out a normal yield curve and synthesizing one, right?
Mm-hmm.
And and effectively, to maintain the margin ratios that they have, they've synthesized this normal yield curve, and it just creates a constant pressure on both currencies, primarily the one where you are borrowing short, And you can almost sort of see when, when the positive feedback cycle starts, where you not only have this, but you have other entities participating in the actual carry trade itself, right? And leveraging it to build more margin, right? So you borrow yen, you buy treasuries, and you get more margin on those treasuries, and that margin comes at an interest rate that is padded by the almost the exact same process, right? And
Yeah.
that's why you see after the SVB collapse, when the market started just pumping like crazy, you see the dollar yen spread just tank like 30%, over the course of the entire pump.
Yeah.
And so it's just mind-boggling to me, but it makes sense, right? And ever since yield curve control got loosened a bit, the at least my statistical measurement of liquidity, and JFresh sort of agrees, liquidity has just gone down.
Yeah, liquidity
Oop, I
is.
can show people that. Hold on.
Yeah, I got two charts, right? I got the light blue guy and then this guy. So this is the the statistical measurement of liquidity, and you just see it dropping like a rock. And then the sister chart to that is that light blue one, which has those same lines on it, where it shows the correlation with the dollar yen spread. And so this sort of tells you, it's almost the smoking gun to where the liquidity came from, right?
Yeah. Yeah.
And that's this sort of thing, right? This abuse of this arbitrage, you know, it creates a very systemic risk, and not only to our equity market through the margin, right? Where we could see if this spread collapses, we could see margin haircuts like just insane margin haircuts, but also you'll see because it's being used for the carry trades being used by everybody, you could see the global credit market just lock up
I mean,
because that is the
it kind of has been for the last couple of weeks, right?
yeah. I mean, well, it has, but that's more so people becoming more risk averse and less so the carry trade collapsing, right? It's
Yeah.
collapsed a bit, right?
Yeah,
We've
because
seen
we've
it
seen
slow.
Japanese bond yields rise moderately.
Yeah, but it hasn't pinned to the 1% limit yet.
No.
So we're not seeing it fully collapse. We're not seeing Japan intervene, at least not to an extreme degree. Uh,
They intervened for like 785 billion so far.
yeah, it's something, but the amount of intervening that needs to happen to bring this back in line is a lot more than that,
Well,
right?
worse
This is
yet, Japan's inflation is still on the rise.
And it will continue to be as their yen gets clobbered,
Yeah.
right?
Yeah.
So and there's some more charts that we could, below those two, that we could sort of discuss, where like what a collapse of that carry trade really looks like. Because this happened in 2008 as well. And this carry trade, it's only really, utilizable so long as the synthetic yield curve between Japanese bonds and American bonds is sufficiently positive, right?
Yeah.
So, so once if Japan raises rates or the U.S. cuts rates, and that yield curve spread collapses, the carry trade itself disappears,
Mm-hmm.
and that's when you get things like giant margin calls and stuff like that. Um, so you can see sort of like in 2008, the carry trade started to collapse before the big crash, and that was probably more so the liquidity issues from the money markets, where you had money markets who couldn't, they couldn't balance their NAV, things like that was happening. But the real crash, right, and then the true collapse of the carry trade happened once uh, America
cut
took
rates.
they took their rates, as low as they could, and that truly collapsed the carry trade. And then you see the dollar yen spread just totally go, just absolutely skyrockets back up to zero. I guess it actually technically tanks, but the carry trade collapses, and that's what caused the real sort of market crash and the rush out of equities, was that margin just was gone, right? And
Yeah.
if you're fully leveraged already with your core fund, the only way you can continue to pump equity prices is through margin. And once that's gone, you get this margin call. You have to dump equities. You have to dump pretty much everything. So it's super interesting, and we're nearing a point where Japan, especially because back in 2008, the yen wasn't as undervalued as it is now, too.
No,
So like
no, it
it's
was
even
much
worse.
more stable. Their inflation was sub-zero, also, which it's not now, right? They actually have they have positive inflation for the first time in like 30 some odd years.
Yeah,
Well, yeah, it's because we all have inflation and we're all exporting it to them.
Yep.
yeah. We could get the perfect storm almost of rate cuts by America and yield curve loosening by Japan around the same time.
Or Japan pegs to the dollar and then the dollar cuts.
The same thing, yeah.
Yeah.
So it's yeah. We're just in like it's this crazy sort of, and that's what I meant when I said the money war was like
The
we're
cool thing
just
about this is something has to break. There's only so long you can push this off, and the yen, even with the minis the Ministry of Finance stepping in and buying yen and shorting dollar, right, at like 500 billion a clip, the yen is still going up, like again, or we're going down against the dollar.
yeah. Yeah, it's crazy. Like the I think that the reason why is because financial institutions don't have a choice. They really don't. This is the only way to preserve yield, is by doing this trade. And it may be risky, but it may also be the lowest amount of risk they can take while still ensuring growth.
I mean, you see it in like the day after the Japanese like yield curve control announcement, the spread immediately on the U.S. side widened like 3% across the board, right? Because um they need to keep that spread nice and wide, at least till they can de-risk into a narrower range. And so like we just see this massive flux of like US bond shorting right after Japan raises its control policy. And they only raised it 0.5, right? Imagine if they went from, 1.0 to 5.25.
Right.
And yeah,
Well,
since that date, the market's gone down like 500 BPS pretty consistently. We've never re-realized the high that we saw after the yield curve control policy shift.
yeah, it's the situation. I think that the writing is starting to be on the wall. I think Japan is definitely um, they're they're starting to signal that they're not going to allow this to go on for very much longer.
Yeah, yeah.
Yeah, so people are starting to de-risk, right?
Well,
And
part
then
of that de-risking process is arguably what led to the failures of like Bear Stearns and Lehman Brothers in '08, right? Was that, they were de-risking the carry trade and selling MBS to the open market, which devalued the MBS and left Lehman standing with, a bunch of fucking undervalued toxic assets, right?
yeah, it's interesting how everybody. I saw a really terrible correlation is not equal to causation on on Twitter of all, because I like Twitter. I don't know,
Yeah,
it's
I
addictive.
know. That's fair.
Um, Elon really invented a great social media platform. Anyway,
What a genius.
um, they were talking about how they were comparing the value of bonds to the stock prices of banks, and trying to make an argument that because the stock prices of banks are doing well, that they must not be doing that badly. And I
Mhm.
just thought, what a ridiculous thing to even try to say while the market is overvalued by almost $1,000.
I feel like you're directly attacking my Charles Schwab play, and I don't appreciate it.
I mean, it should all be much lower. But I think what's interesting is that nobody really talks about the bank walk anymore, but the bank walk is still going strong, right? The
Mhm.
money is very steadily moving out, which is only going to increase duration risk on the people who are already holding bags, right? We
I
already
mean,
know all the
duration
bank.
risk is just increasing incrementally anyway because the Fed keeps bumping rates. The Fed's raised
Right.
rates 3 times now since March.
Yeah, and I think banks are basically just trying to get their interest returns up by just pumping more credit into the market, right? And like J Powell and all of them keep expecting credit to contract, and that's starting to happen in some places. But I think most of these banks are just giving money to
I
anybody
mean,
who
that's
wants
yeah,
it.
that was like the whole basis of this, right? It was like where when I started digging into this, it's like where the fuck is the money coming from? Because loaning out of the Fed's expensive, right? You can't do it. And then
Yeah.
that's when we started to look at like Japan as the other option because of the spread in the curves, right?
Yeah, you guys want to talk options real quick?
Yeah, yeah.
Yeah. Um, so I popped my famous little
Oh,
SPX VIX
oh, we got
chart,
our little boy.
my
There he
SPX
is.
VIX. Um, this this is really exciting to me. So what this is telling me that for most people here know it, but I'll just say it very quickly. So the orange line at the top is the VIX inverted and normalized. Both of these are normalized, and the blue line is the SPX normalized to take out the long-term trends and just look at the effect of volatility. So you would expect these lines to fairly well overlap, and indeed, over 2022 they overlap pretty well. And the strange thing happened, especially it started before the banks collapsed, like in early March. You could see that well, really, it started in December, right? This was the thing that sort of led us to believe that the market would bleed upwards, was because the VIX was being suppressed, and it looked like sold calls were going to be squeezed out. And indeed, that's what happened from December into January. Those sold calls got squeezed. A little bit more of that was attempted in early, February, early March after the market dropped, but then the banks failed, right? And then those short puts, evaporated, which caused us to drop. But then they just went even harder on that strategy. Everyone started selling short puts, and you could see that from like March until basically the end of July, or our last peak. Those sold puts basically squeezed out sold calls, and shorts for that entire time from March to July. And then we finally caught up. You can see at the bottom, we finally jumped over the solid red line and even got up into like the one standard deviation above, at the last peak, which tells me that there's no one left to squeeze, right? And it was right at that time then that, things started falling apart. And now what I think is happening is the market's going down, and the people who were shorting vol are still trying to resist, as you can see from this huge drop that we're in now, and they're resisting really hard. Um, and so
Holy
what
shit.
so what could you know I have to look at a lot of data to kind of get a sense of
Is
where
some of
we
that
are.
like a transient?
uh sure, I mean, some of that can, if you look at like the beginning of 2022, you see like
Yeah.
that big drop there. Part of that is the fact that there's just a lot of things changing at that time. um But I mean, this isn't just like a 1 day thing, right? This is a trend that's been occurring over the course of like six trading days or so, at least now.
Yeah.
Um, and so what I believe is happening is the market people are de-risking, and even more so people that are very long that have enjoyed quite good returns in the first half of the year are more incentivized to hedge to the downside because they don't want to lose all those gains, right? Which is real bad for short puts because they're all but just buying these really, really cheap puts. And so I think the short puts are starting to get squeezed out. Um, and it, so obviously two things can happen here, right? I mean, the short puts can win and push the price right back up and we get a big spike, or the short puts can lose, in which case we're going to go pretty far down. And so then I have to look at other data that I don't have a picture of to show everybody. But if you look at delta and gamma and vega and charm, so right now charm actually wasn't a huge. It wasn't actually very big for this OPEX, and we bled up a little bit. Charm was positive but weak, and we saw just kind of like a slow bleed up all day Friday, but there was nothing really super interesting about Charm. But Vega, Gamma, and Delta are telling an interesting story in that the Delta is quite negative. Um, more negative than it's been since the banks, or it's the more negative than it's been since the banks failed, right? So sentiment is currently shifted. Um, Delta is also large, right? So people keep looking at things like put call ratios and saying that there's just fewer bought puts than there were before, but I don't think that's true. I think the bought puts have always kind of been there. They've just been drowned out by the sold puts, and so when those sold puts get removed, I mean there's a lot of delta there that will need to be hedged, and not very much delta fell off from Friday. I mean, Friday's OPEX was actually quite mild in terms of the total amount of delta that fell off. Gamma still quite high. I mean, higher than it was in most. Largely we're definitely negative gamma, and it's still very negative compared to even many times in last year, right? So we're very negative gamma environment, so volatility will increase, which will pressure those short put positions even more. What's also really interesting is that Vega exposure is dropping, right? I mean, and I think this is part of that de-risking narrative that we're talking about, where people are slowly trying to get out of this short put trade, right? Because they have so much Vega risk, and Vega is starting to become a concern to people. So the Vega risk has been increasing pretty steadily since like October of last year. Vega risk has been increasing. It's pretty much since the market's been going up. And then in basically right at the end of June, Vegas the Vega exposure sort of bottomed out, and now has been decisively turning upwards, right,
Yeah.
or decreasing. And so this is a de-risking event, and this is people who are short vol and short puts who are largely de-risking. And if you look at sort of indicators of the volatility smile, the volatility smile started to indicate that this transition was occurring about the middle of July, and we didn't peak until about the end of July, right? And so there's pretty much a 2 week lag between when this started and when we started seeing the effects of it. And it's still going down today, right? Even after OPEX expired, there's still a decisive downtrend. And so I honestly, if it wasn't for Nvidia earnings this week that could throw a wrench into everything, um, I mean, everything looks like we're gonna get 2 more weeks of down, and it's gonna be rough.
Yeah, I'm kind of looking at the smile like 28 days out, or like out to like 9:15 right now. And it looks like they're selling puts like all the way all the way up to like 40, 43.50, 60, 70. They're selling them between 310 and 295. They're selling them between 250 and 270. So if maybe they're just trying to like roll the risk down and out of the money from the
I,
like 450s and shit that got buried last week, but it looks like they're still fucking underwater at like 440 through 465, 460.
yeah, I mean, I think that obviously people are looking for a bounce and positioning for that. But everything that I've seen, just in the same way that people kept waiting for a reversal on the way up that never happened. I see a lot of potential for downward squeezes to continue occurring as people keep waiting for this bounce that doesn't really
Happen.
materialize. Now, obviously, the big wrench in that is Nvidia. If Nvidia knocks it out of the park and just
I mean, even if they double in valuation, is it enough to bring all that money back? I mean, you're
that's
talking
see that I'm not
you're
sure,
talking
but
multiple trillions lost out of the Mag 7 in just the last couple weeks alone, right? Like, and Nvidia,
um,
like even if Nvidia hit like fucking 800, like that's only 1 trillion of that market cap back.
the Mag Seven's lost since the peak. They've lost about a trillion.
Just a trillion?
325
So,
to
like Apple's
one
lost
point
half of that.
1.2 trillion.
Okay. So Nvidia would
So
have to regain 1.2 trillion of that valuation to correct this. That's fucking
well, that would be, yeah,
ridiculous.
that would be to correct upwards, right? But the question is not, is it going to reverse everything? The question is it enough of a pop to allow short ball to regain control of their position?
How do you feel about the fact that like non-adjusted delta exposure on the dealer like rocketed up on Friday? Because that's usually not very bullish.
Non-adjusted, so just the decks.
Yeah.
Yeah, it always pops a little bit. If you look at all the other ones, all the other OPEXs, they pop a little bit, and then the quarterly ones, so like September,
This one seems like
December.
a bit large. Well, yeah, the quarterly ones are bigger, but this is kind of big for a monthly.
It's pretty. It's not
Also,
tiny for a
Charm
monthly.
turned negative, right? Do we now have? Did, yeah,
It
right.
it it popped negative very briefly. If it is, we're basically at like zero charm. I don't know if it's really strongly negative. What I'm more interested to see is skew adjusted and non-skew adjusted charm recoalescing, right? Because
Yeah,
they started to break apart back in March when that I mean that's when like volatility got real crazy, which is where we started seeing some divergences in some of these things. If those start coalescing back together, that would indicate that the short side is losing. But yeah, I mean, charm's just generally not really a big deal unless we're at a big expiry. Like I said, charm. Obviously, I think some of the drift up, like the relentless drift up, and a lot of stuff on Friday was just due to charm, but it wasn't super strong in the sense that like I mean, we popped a little bit at the kind of near the end of the day, but it got
yeah,
back
that
down
got
to
stuffed
normal.
real quick.
It
they
wasn't
they
like if
did they
you,
did close out some of their 43.75 sold puts, like like a third, not even
mm,
a third, like a fifth of the position got snapped shut on that bounce, and that's why I mean we had like that. I was talking about like we were gonna have a 3 sigma move on the stream, and then we popped to like, but like I didn't count on the 3 sigma move back down.
oh yeah, I was doing some work at the time, and I like looked at the chart, and I was like, whoa, this thing's really going. And when we touched 43.80, I bought another debit put spread. So I was like, this seems ridiculous. And then yeah, so I'm already up on that. That's but yeah,
Yeah.
so yeah, I mean, I hate to say this because every time I say something like this, it always goes the other way. But this is a this is a very significant moment of weakness for short puts, short ball, and bulls. Um, And if this doesn't catch a bounce, it will definitely keep going.
It sounds like you're saying bounce.
I mean,
Like you're saying other words, but all I'm hearing is bounce.
well, that's the thing. They have to get a bounce. They
Yeah.
have to get a bounce to regain control of this. If this doesn't bounce, pretty much bounce tomorrow, it's going to be rough.
I think,
And even with a bounce, I don't know if they can keep it. Right?
I think, yeah. Let's do our forward outlook for the week. Let's let Dork start this time, though.
All right.
Yeah, so I just want to say I was the closest to being correct last
Wow.
weekend. I said flattish up, and it just went down. You guys were more bullish than me, but I think that we underestimated, the effects of liquidity on the market. So this week, I think the likelihood of a bounce is way higher than it was last week. So I agree with Jay Fresh that if there's going to be a bounce, it's going to happen on Monday. If there is a bounce on, like a convincing bounce on Monday, like 100 BPS up day, 110 BPS up day, we'll probably continue to melt up through the week, or at least heading into NVIDIA earnings. But there is some important data, like on Tuesday, there's the H.6 release, which is your M2 money supply, velocity of M2, all those things that could affect things. But I say, yeah, potential bounce on Monday, and if so, we melt up for the rest of the week, and then NVIDIA, will only add momentum to that. But if we don't get a bounce on Monday and liquidity continues to worsen, we're looking at, another week of agony, probably, especially with OPEC settlement Monday, Tuesday. If the bounce doesn't manifest in that time period, I don't think it will manifest unless NVIDIA just has a absolutely gangbusters earnings that reignites faith in growth. So yeah, to put it succinctly, either bounce on Monday and melt up, or poopity poops down another couple hundred basis points next week.
So I think.
Yeah, but you have to pick. No. You have to pick
okay.
one. You
I have to
can't
pick
say
one?
you can't say it might go up or down. You have to pick
That's
one.
not fair.
Okay, fine. Oh, you know what? I'm gonna be the pessimist here then. I'm gonna say that liquidity is drying up at a rapid rate. The credit market is tightening, and the effects are being seen in the equity market, which is a bad sign. So I'm saying that we're not going to bounce on Monday, and we're going to poopity poop down another couple hundred basis points.
Okay, I'm gonna draw your projection here. So you think flat Monday? Wait, hold on. Flat Monday into downs the rest of the week?
No, I'm saying down Monday and Tuesday, and then flat the rest of the week.
Okay, so gotcha. Like that.
Yeah, essentially Tuesday's the pain, and
then Jay Fresh, what's yours?
I'm gonna have to. You know what? What
Remove your desire to inverse Doric.
No. What else do I have if I don't have data, right? And this data looks so solidly bearish that I'm gonna go with just a 300 BPS move down this week.
Okay, so just fucking
just down.
Okay.
Like a diagonal line down. I love it.
Yeah, with some volatility around like NVIDIA and Jackson's Hole, but just down.
Yeah, so I threw some in there. Yeah. I'm gonna say down tomorrow. I think the hardest down of the week tomorrow, actually. 325, maybe even 4,300. Conservatively, I'll say 325, but possible here. And then I will say hard bounce Tuesday into NVIDIA earnings. With NVIDIA earnings then determining. So I think they try to regain 4,350 or 4,400 before Nvidia earnings, and then that and Jackson's Hole determining our trajectory for the end of the week. Either we make it back above delta neutral before Jackson's Hole, stabilize there, and then Jackson's Hole moves us higher or lower. So I'll go with probably lower, because I don't really have high hopes for Nvidia earnings or for Jackson's Hole. But I think our hardest drop tomorrow, with all the charm falling off from the short puts, and the gamma getting hedged off, also the positioning going into tomorrow. I think tomorrow is where we see the drop, and then I think we see like a big fucking OPEC settlement recovery.
Yeah, all right. Well, those are definitely 3 different predictions.
Yeah, they are.
So,
or tomorrow's Black Monday, but we'll find that out tonight, right?
Yeah.
I think all of us reserve the right for 10% of our prediction to be tomorrow's Black Monday.
I mean, it wouldn't shock me, right? I mean, we're at a point of extreme weakness in the upside. It could get bad.
Yeah, I agree.
All the data looks like shit. I mean, the economic data still looks somewhat ambiguous. So like, there's a hope that some prints can reignite faith. But like I said, H.6, I think it's going to come out, and I think it might be disappointing. In terms of money supply growth and money velocity recovery. I yeah. Nobody
They're
can hear you.
saying F.
Am I not? Oh, well, you guys can hear me. That's all that matters.
Yeah, I can hear you.
So I was saying that if Japan is responsible for the reduction or the increase in velocity of money supply, and they're de-risking the carry trade over the last few weeks, we might start to see a reduction in velocity, but also a reduction in total M2 supply.
Yeah, I agree with that. Yeah, it's just the evidence is starting to stack up, especially. I mean, just the direct correlation between the market drop and the Japan decision alone sort of really kind of gets me going, right? And the relentlessness of the drop. Like there hasn't throughout the last 3 or 4 months, right? Any real pullback was met with a convincing recovery within the next week. And this one, we have not even seen anything come close to that. We've seen some bear flags that last all day, but then just immediately fall back down, at open, which,
Yeah.
intraday drops like that. Like we're not talking like overnight, drops into recoveries. We're talking overnight recoveries into drops, right? That's a sign that people are de-risking and consistently so. So I mean, this is turning into a trend for me, and that's why I want to stick with the bearish prediction mostly.
It's if anything a worsening trend, right? Yeah, I want to stay with the bearish prediction, but I don't want to ignore the potential for one last. Because I mean, if so much is pinned on Nvidia, right? Then if they can get the market back to delta neutral by Nvidia earnings, whether they do that tomorrow or Tuesday, right? If they can, as long as they can get it back there by Nvidia earnings, and Nvidia earnings is everything they hope it to be, then they'll have an influx of buyers that they need to stabilize price action, at least until they've de-risked more substantially, right? And so
yeah, plus they'll also gain leverage on the short put again as well.
But I think to get the momentum to get us back to delta neutral, they need to drive all the long puts and the money first. They need
Yeah.
to like get them in the money and then force the capitulation on the way back up, which they tried to do Friday and they kind of failed at, right? But if they
When you
can
say kind
do
of
that.
failed, you say kind of failed. Would you say?
I mean, they didn't get back 4,400, right?
Closing where you open.
Yeah, right. Well, closing where we closed, right? And so
Yeah.
it was not a even with charm on their side and puts repositioning, it was an unsuccessful endeavor, and that really does make me very bearish for tomorrow. But I think if they can get the short dated puts to capitulate, and I don't see a reason for them not to try one more time, especially now that the risk of from OPEX is realized. Like they already lost their money on the 75s, they lost their money on the 4400s, they lost their money on the 4425s, the 50s, the 75s, the 4500s, the 4525s, and the 4550s, right? But they still have all of that same risk sitting out in September. And arguably a little greater, right? Because the Vega's so much higher on the longer dated expiry. So I think that they gave the money back Friday, right? They lost. There's no question about it. But that other big basket of risk sitting out there, I think they're going to try to do something to save. And the only real events that I can think of between now and September 15th that are gonna drive buyers into the market are Nvidia earnings and Jackson's Hole, and I don't see an outcome that's bullish at Jackson Hole. I mean, the best thing that they could do would be to, keep increasing rates because it widens that currency spread. I think I think a rate increase here is the most bullish outcome, because if they don't increase rates and Japan's staring down another hot inflation print coming this month, right, in September, and yen's still losing ground, the Bank of Japan or their Ministry of Finance might step in and do a little more to contract that spread, right? And if they do, and the Fed's just flat over the next month and a half, that's going to be a big problem, right? That's going to lead at least lead to more risk off. So I think this is their shot. If they want to pull back that risk, then we're going to go down anyway, right? But we'll go down slower. And if they're unable to get that risk off the table, we go down really fast.
Yeah, I'm ready for fast.
I like fast. I do.
Me too.
I have a disgusting number of debit spreads open to the downside, so I'd be okay with that.
I have one put.
Yeah, I know.
Taunt.
Yeah,
It's
fucking
already
A.
taunted, actually. I'm up like 90% on this put. I should just close it, but I'm not gonna.
No.
You should
just have more.
30%?
Honestly, you should just have more puts, right?
No. Here's what you should do. You should wait until it's minus 30%. Then wish you had closed it at 90%, but pray for a reversal. And then when it's minus 80%, you can tell yourself, well, now it's worthless. I might as well just hold on to it and then wait for it to expire worthless.
Yeah, see, I was gonna say you should do the pickle jar thing. Don't sell it at plus 90%. Sell it at -10, then watch it go up to 1,000%. Yeah. And go, I used to own that contract. What the fuck? Then blame me.
Yes.
Oh,
yeah, I forgot about that part.
What's funny is both of your predictions are accurate at the exact same time.
Mine?
Both of yours. They're both accurate.
Yeah, we've been through this the pickle jar super cycle a few times.
Yeah. I mean, that's why we're also afraid to pick a direction too.
I mean,
I actually kind of love this. Like for my longer term, for intraday shit, it's a pain in the ass because it's so choppy. But for the longer term shit, I love this. I don't have to hedge anything under their risk at all, right? Because any upside test below their risk is a failure, right? And then that just means it's gonna go right back down again. So I could just wait for it and buy more puts. I really only need to hedge above 4,400 in the case they're successful at turning shit around, right? So that's all I've been
Yeah.
doing. I'm just hedging like way the fuck out of the money with dirt cheap call spreads. I don't care what happens to them, right? If my puts are gonna like 50x, why would I care if I throw away $100 on a 200 wide spread to the upside? Even if they win,
Okay.
I win, right?
Well, you're gonna get Chad all hopped up and all worked up and hot and bothered.
They're
So
always hot and bothered. It's whatever. Like
yeah.
See, what I really want to know is
bunch
how
of
much money did chat lose buying calls every day for the V? That's what I want to know.
more than zero.
I mean, yeah, I did that the other day. I didn't. I mean, it was just like $100, but
Friday I bought
Yeah.
calls and puts and I made no money on either one.
oh yeah, I bought puts on Friday and they were very frustrating.
Options on Friday? Yuck.
Yeah, I bought calls in the morning because I thought it was gonna bounce, and those did well. But then I spent all the money I made off of those buying puts in the
I
afternoon.
was about to say, how did you lose money on calls when all we did was go up?
Yeah. So I then decided that it was time to buy puts in the afternoon because the calls kept failing to gain any substantial ground, right? And they like we kept getting these big like volumetric sell-offs to the downside, and futures kept failing resistance, and I was like, okay, so this is just gonna collapse into the end of the day. So I started spending all my call profits on puts, and I just made nothing. The whole fucking day was a wash.
Ugh.
Nope.
Thank goodness
Nice.
IBKR lets you buy SPX options late at night. That's true. Yeah, that is one of the benefits. I think TOS does that too. Like both of them, you can trade after hours or AM. Like you can trade in the AM. All right. Well, we've got the predictions ironed out. We know. Well, we have some expectations of what'll happen this week from the video earnings and everything. Is there anything else that we missed or forgot to talk about?
I don't think so.
I mean, yeah. So the long and short of it is, it still looks fucked, but they may try to unfuck themselves.
Yeah, I'm not. Yeah, I'm expecting them to try to hold on. I just don't know. I mean, I feel like Friday was some of
I
that.
really don't like that you shared that
Closed
chart
where we closed.
that chart with me. Like that wasn't cool of you.
Which chart?
It's gonna make me lose money. The -3 standard or -2.5 standard deviation move of the SPX and VIX normalized.
I mean, all it's really all it's really telling us is that there's gonna be violence. I just don't know which way, right? But
I mean,
everything else says probably down. But you never know, right? If they're super desperate, they could just like dump all their, just go for broke, and it's enough to get us big enough bounce to squeeze, and then we go right back up and start this whole nightmare over again.
yeah, I'm definitely wary. Like this week, especially. Like last week, I was feeling pretty good, especially by Tuesday when we hadn't recovered at all. I was feeling good, but this week it's pretty much rinse and repeat for that, right? Like any given period like this where we have sustained downside, you have to expect a relief rally.
Yeah, I agree. Also, I want to say about the 1 and 3 month correlation here. We've seen the 3 month correlation move up a lot, so like future volatility expectations are improving, but the short term volatility expectations are still really fucking muted. And they've moved up. They moved up a bit. I mean, in line with the 3 month, but it's interesting because like the VIX futures, like the forward contract on VIX, Friday only moved down like 2%, and VIX was down. I think at its peak, VIX was down like 4 or 5. And so that divergence was a little bit interesting. Also, VVIX has continued to climb, even though VIX is dropping in the short term.
Oh yeah, VIX options are starting to look spicy.
Yeah.
There's definitely more short puts, a lot more short puts than there were before. So it'll be interesting because, like we've said, calls are.
Has the pricing on them normalized at all?
I don't know. I haven't looked, but it doesn't surprise me. This tends to happen when we see large rises in VIX, we see much more sold puts on VIX than we see bought calls, which has always been strange to me. But
So the in the money put is for this Wednesday. The in the money put is 0.47 at 18. The in the money call at 17 is 0.74 delta. So I would say that
yeah,
they're still not appropriately priced.
No way.
Um,
Yeah.
yeah. The out of the money call is 0.52, so a little bit better. But the spreads are shitty. Let me look at September's. What's September OPEX? What's the fucking monthly expiration for September? It's all fucked up.
September would be the
The
15th.
so the 13th expiration. The 13th expiration, it's a little bit better. 0.53 out of the money on the call side and 0.36 at the money on the put side. At the money, 0.36 on the put side. So slightly better, but still really shitty.
yeah. But the fact that those deltas are getting low on the put side is just a reinforcement that they're selling puts,
Yeah, yeah.
which always happens
Yeah,
when we get
the bid on the put side is like 0 across the board. Like I'm not kidding. Like they're all like 0.15 to 0 with the asks at like, 150 down to like 50 cents.
Yeah, I mean, the last time we
I mean, I think they're
were,
selling them in the money because you got like on the $18 put, you've got like 0.62 on the bid, 2.17 on the ask.
yeah, I mean, in the past when we've been, um, this when the options chain on the VIX looks so bullish, which is bearish, right? Because it's inverse, but
Yeah.
um, we would expect the VIX to be something on the order of like 20.
Yeah, VIX is, I mean, also based off your chart, VIX is just way the fuck off.
Yeah,
Yeah,
I
because
like
they're still resisting, right?
Yeah.
And it's, oh, if they have to let go. What was the deal? Oh, we didn't. Did anybody talk about crypto, Bitcoin taking a big poopy?
Oh, something I heard something about SpaceX selling like 300 million worth
That
of
was that seemed to be
BTC.
that seemed to be the narrative. But was that confirmed or?
No, does it need to be? It's Bitcoin, right? I mean, it still looks like shit. It broke its long-term trend to the downside. It could keep falling. I've got my buy order open at 12,000 still, so
Oof, that's too high.
too high. Yeah, probably. But I'll just sell on a bounce, right? Like I don't need it to I don't need Bitcoin to survive.
Dave,
Yeah,
you just need some more suckers.
I just wonder if this is. I mean, Bitcoin is so illiquid. There's so few people that actually own a significant amount of Bitcoin that, I mean, this looks potentially quite bad, right?
Should we mention that they're all basically hedge funds and banks?
Yeah.
Okay.
I'm just wondering because of the timing of it. I wonder if this was a margin call
It could have
after
been.
Friday.
I mean, the the most interesting thing that happened last week, to me,
Why would SpaceX sell it all at once? That's what I don't understand. At a loss, right?
Elon's
Remember, it's
busy
at a
losing
huge
all his
loss.
money on Twitter.
I mean, didn't SpaceX buy in at like 60 or something ridiculous?
Did they? I know Tesla bought in really high, but I don't know
Yeah,
when he had SpaceX buy in.
because I think I mean in 2021, Musk publicly disclosed
TOS
SpaceX.
doesn't. TOS does not allow. Oh, okay. I didn't know that. Fidelity is the only U.S. broker allowing Globex SPX, and they're only their pre-market, not all night. Hmm. Lame. Short hood. Well, I don't know. Do you want to?
so the one interesting thing that happened was on Thursday of last week. Like the most interesting thing to me that happened on Thursday was USD JPY action towards the end of the day.
Where it started to move back up.
Oh yeah, where it just rocketed up.
Yeah, you
Yeah.
can take a look at that.
That one was really interesting to me because it correlated perfectly with the big fat drop in futures, right? And a volumetric sell off.
Yeah.
So I in terms of margin calls and all these things, that's one of those ones where I actually got a little tinfoily on it, right? Um, Bitcoin dumping, I don't know how much money, like how much market cap did Bitcoin lose on an 8% drop, you know?
I mean, the
Uh,
total market cap for Bitcoin is like 500 million. So it's who gives a shit,
Not 500 million. That's
isn't it?
oh my.
500 billion, right?
I thought you said million.
Oh no, but it's like smaller than Apple.
Yeah.
It's smaller than fucking Nvidia. So it's not even Mag 7. Also, arguably, it should have no real effect on equity prices, right? Especially
so
now
the
that
other
people
thing,
aren't getting like 100 to 1 leverage on it anymore.
Yeah, but an 8% drop is still like $40 billion.
Yeah.
It's not nothing. It's not nothing.
more interesting though, is the 55 basis point drop in the 10-year at the same time as the yen spike.
Ooh.
That was, once
Conversion? I
again,
think. That's interesting.
yeah. So there's rumblings in my tummy that tell me that I don't know if necessarily someone got margin called, but someone definitely uh, took a haircut to their margin potentially, right?
Ooh. Yeah.
It didn't correlate necessarily with the big drop in Dixie either. So I'm, there is no words to describe how bearish I am on our entire situation from bottom to, but these sorts of things when they happen and you see, like big sell-offs, and the forex market sort of, you know, being part of the response and yields, either someone just got bearish, right, and just moved into treasuries, but the move in yen tells me that's not necessarily what happened.
Yeah.
So I'm not gonna say anything crazy or inflammatory, but I think the weakness is very apparent, and not just the bulls in the options market being short puts to push up equity prices. Even though I think those were banks that were padding their balance sheet. I think that bulls are losing momentum also in their ability to catch a bid, and
Yeah.
that right there is what makes me extra bearish, right? In the short term, is that they may be able to cause a bounce and push off of manipulation and repositioning,
Mm.
but I'm suspicious that their ability to catch a bid off the back of that, you know, people with the available margin to jump back in on the momentum trade, I think that is drying up, and that should be genuinely scary to bulls.
Yeah, I mean, you're also getting that effect where like retail and smaller traders are starting to leverage the zero DTE puts in a very similar way that people were leveraging the calls, and it's in a negative gamma environment,
Those
which
damn retailers.
fucking retail getting ready to try to crash the market and sucking up all of Goldman's liquidity, right? I mean, imagine being an MM right now and you're selling fucking zero DTE puts for $2 out of the money to dipshits in the pickle jar, and
Excuse me.
then they go in the money.
Oh yeah, dude.
10x.
It's the wealth transfer, bro.
No, I have
Happening.
I just remember, bulls have been saying all year, the trend is your friend. So to bulls, I say, just it's not scary. Just
Yeah,
trade the trend. And
yeah. They'll always sell
Yeah.
you more puts, right? Well, although they're trying to stop that.
Yeah, so to bring it back to JFresh's chart too, right? What this tells me is that, the curve, that bottom curve of SPX normalized minus VIX normalized could normalize, like it could get back to zero, but the way it gets back to zero could be one of two ways, right? One, the SPX bounces like crazy, or two, VIX spikes super
yeah,
high.
Yeah.
that's what I'm hoping. That's the momentum is on the side of it spiking. So
Yeah.
to me,
Big
it's not,
time,
it's
right?
better than a coin flip. I mean, it's like a 70-30 or better kind of situation, in my opinion.
Oh yeah, God, this is getting me. This is gonna make me overhold my puts so much. It's gonna be
Oh
great.
man, I can't wait because
They're gonna
Dork, you're
wreck puts, dude. Like minus 50% on like at the money puts, just IV to fucking zero. It's gonna be
Dork.
wonderful.
What do you have to get on this put to be debt free?
Market
Actually, I
crash.
think. Oh well, Spy
No, he's
400.
just got a little bit of car debt. That's it.
I
Right?
mean, yeah, but once
That's
it
pretty
goes
much
in the
it.
money at like 426, don't you just like cut it and like roll it out into like two 4100s or 4200s,
And then what do
420s,
you
I
do?
guess.
I could do like 2 weeks of theta on some SPX 3500s, but I mean,
Oh, gross. No, that's
I
Ew,
know,
awful.
right?
what?
Yeah.
It's only worth like $400, guys. Chill. Like, but
Why don't you just sell those?
so
I
well, I don't have margin, but so if SPY dropped to give or take 404, I could theoretically use that money to pay off all the rest of my debt. But
all right.
What if
I'm
I
not going to do
SPX
that with that.
SPX to 4050.
what
Let's
if
go.
what if we said SPX to 39, let's say 3950.
I'm not gonna take that money and just instantly go and pay off my debt. I'm gonna go and take it and then turn it into
Try to
uh,
turn it into more money.
exactly, yeah. Because
Yeah.
like to truly actually take the money and pay off my debt, I'd need like SPY 350, and then I would take half of it and put it all. Or I mean, I guess a third of it and pay off my debt, and then
What
take
if we said SPX to 3669?
Don't you dare.
the
All right. Fuck you.
You know what I'm looking at, don't you?
I know exactly what you're looking at, but we've never tested that. That's why I'm saying 3952 because it's reasonable. What you're
If we
saying
get
is fucking ridiculous.
Okay,
we
let me
see
look at the skew.
3667, we're going down to like
You're
32.
just saying market crash. Like dealer goes super fucking long. They're going as long Vega as they are Gamma. And then the market's what, going to like 2800, 2500?
Okay, well I'll use the skew adjusted value.
Yeah.
30
That's what I just
39.50.
said.
39.50. Okay,
Yeah.
I'll take it.
39.50.
I'll gladly take it over the next 3 weeks.
I'm not going to say I have zero debit spreads out in that range because I have more than zero, but some days I wish it was zero.
Valerian, I'm sorry, but I don't think GME is going to go to 38.57.
Oh,
I think that window
sweet summer child. GME's
that maybe last year though. That window is closed.
yeah.
GME's going to 5.
Well, hold on. It might go to like 24 before that.
Yeah, there could be a bounce coming.
Yeah.
I haven't really been following it, but
Well, if the economy doesn't take a hit, it could bounce. But if
the window is never closed. I like that.
GME's charm moved a little positive on Friday, which is neat. And put interest picked up substantially. You know what that means, right, JFresh?
OPEX.
I mean, but like it's so It's such a lame looking one. Like they're not cool like they used to be.
Yeah.
So who cares? Also, delta neutral on GME is now at like 31 cents. Or gamma neutral, sorry. Gamma neutral's at like
Holy
31
cow.
cents.
Oh my gosh, yeah, I haven't looked at this in a long time. Oh man, yeah, if you look at like just the delta exposure on GME, it is the lowest. It's now the lowest it's been in 2 years.
Yeah.
Oof. Yeah, it doesn't instill much confidence in me that there's going to be a lot of volatility.
I mean, like, I think they'll clear their shorts, but like it's just not like there's nothing there to catch them clearing it, right? Like there's no bulls.
Yeah.
And even if they come in, they'll be weekly, right? And then they'll fucking sell the second they're in the money, and then that'll collapse everything, and then the market maker will just like eat up all the free
Yeah.
volatility, and the
My
vol shorts
question
will just sell it even more.
is why are all the meme stockers still in GME when the meme stocks are Apple, Microsoft, Nvidia? I mean, those stocks are all moving like 3 to 6% a day.
Yeah.
Oh, well, SPX, I mean, I'm sure that's where all the bulls went, was to SPX. All the GME memers, they went to SPX 0DT and never looked back.
Yeah, all the gamblers moved on.
Because SPX is the real meme stock, right? Like the 0DTs, like those things are, it's a GME every single day on those fucking things.
Yeah, if you nail the right direction out of the money on SPX, you're like fucking 20x in the options contract intraday, right?
Yeah, I 50x'd it the other week. That was exciting.
Yeah, I've
That
gotten
was the day that Japan announced the
Yeah, that was a good one.
I 50x $168.
Like
It was
Gerd said months ago,
9 grand by the end of the day. It was insane.
SPX is OPEX every day. It is. I mean, when you have VIX around like 16 and intraday price movement is like 50 BPS up, 50 down, it is OPEX every day.
Well, and all the volume concentrated on 0DTEs as well. Yeah.
Yeah.
Yeah, it's absolutely a fucking meme stock.
You got
All right,
everybody
guys.
selling options in the morning and pulling them back at night. It's and not only in essence but mechanically it's OPEX every day.
Yep.
All right, guys. I got a family and a life to live here.
Yeah. All right. Thank you guys for coming on. I appreciate it. I'll see
Yeah, it was
y'all.
fun.
I'll see y'all later.
I hope futures open up 100 BPS down, and we can all just
Yeah, that'd be cool as
ride
shit.
ride the train to 10.
I do think that Asian markets aren't going to do well in the morning session. I don't think Euro's going to do super great. So, I'll probably actually play futures tonight a little bit because it doesn't look good. I don't think the setup technically at least looks very good. And if those are both down and we get like 30 BPS to the downside, if we open tomorrow below 43.50, we're going down hard.
Oh,
love it.
Yeah.
Love it.
If we open flat, then yeah, it's going to be shitty and choppy. But if we open below 43.50 going into tomorrow, it's going to be really bearish.
All right, 36.69 in the week. Let's do it.
All right, guys. Thank you so much for coming on. I'll see you around this week. Everybody else, thank you for tuning in. Have a good rest of your weekend. I'll have Pickles picks out tonight. JFresh won't read them. You know, the usual.
No.
I'll see you guys.
Whatever you predict, I'll probably end up selling call spreads into it and get wrecked. So
nice. Well, that's the way.
And then I'll read it and be like, man, I should have read this.
All right, later, guys.
See ya.
Thanks for having us.
No problem. Have a good one, everybody.